Right, we're back. Welcome back. Friday. We're just going to go through some of the latest and greatest developments. It's been a big week, as Barry Shilbit would say. But gents, how are we?
Yeah, all good.
Yeah, I'm going good. I'm going good. Like, I'm going to pause my mic in and out because there is a man blowing hard outside my window, as you can probably hear.
You need to be careful where you use that phrase.
Dan, the question is he courting you? I mean, is there a long-term relationship about to happen here, or is it nothing we got to worry about?
I don't know, but he keeps like looking through the window like that.
Yeah, so it might be a long-term thing.
Oh, mate, this is definitely not a short-term thing. This is going to last the whole weekend, not just a Friday night.
Has he just got a new toy or something that he's trying out? Or he hates his partner?
Mate, he definitely hates his wife because he's out there. There's like no leaves on the floor, and he's like just blowing dust around, and he's just like blowing it into the cars in the corner. It's ridiculous. Now he's stopped. Now he's recharging. Like,
maybe he's in the doghouse.
Maybe he definitely is. Poor bloke. Mate, he's just got this from BQ. It's his new toy. That's what it is.
That's exactly what it is. Right. So there's a lot to get through. I've got around 45 minutes, so let's kick it off with Coinbase partnered with Blackrock, which is good for them because they were literally down only. They kind of marked the top, which is quite funny, to be honest. But yeah, so direct from Coinbase, we're proud to announce a partnership with Blackrock. Blackrock's Aladdin clients will now have direct access to crypto markets through Coinbase Prime. What's the thoughts around this? I think it's obviously a great move from Coinbase. BlackRock could have quite easily went with FTX, could have quite easily went with, well, probably not easily went with Binance, but yeah, I think it's a solid move from Coinbase because they've been getting a lot of shit recently, haven't they? So, and obviously, Bitcoin maxis are going to be well impressed with this one.
I think the interesting thing about this is that, as you said, Coinbase has been pretty much on the back foot since we hit peak, in May of last year. They were the top signal. They listed, and things have just been really bad for them. They obviously let a whole lot of their staff go. They're not the most liked business in the space. In fact, I think they're probably the least liked exchange in the market. I think for very good reason. There's a lot of, they've had a lot of issues around, like insider trading, overpaying directors. I mean, there's just a whole lot of stuff. Like, just the news hasn't been good to them at all, and they just don't do themselves any favors. Like, right in the middle of it, they let, what was it, 5,000 staff go worldwide, and it really isn't a great reflection. I was very concerned on the pump and dump narrative with BlackRock getting in it. I was like, oh, here we go again. More Wall Street chads coming in and just completely taking advantage of the market. But what I've seen is there is a silver lining here. So it's not just doom and gloom from our side. What I really liked seeing in the news this week was that BlackRock are looking to expose spot BTC to their clients. And it seems like the strategy around that is for longer term holds. In fact, it does look like it's a longer term hold strategy from BlackRock in terms of what it is that they're presenting to their clients. So that's a positive. Obviously, that's what we want to be seeing. We want to be seeing more holders coming into the market and kind of like securing their positions in Bitcoin. It's what the market needs more of. Obviously the futures market and all the rest of it hasn't done Bitcoin any favors since Wall Street got involved, and maybe this is a positive thing in terms of their relationship with Coinbase. Maybe Coinbase needs, a steady hand, and if anything, when you've got $10 trillion under management, I think that's a steady hand, and maybe this is probably the best thing that's happened to Coinbase even before their listing, because as we know, their listing wasn't a good one. So that's my take on it.
Yeah, the listing. Even on the recent kind of bounce from that news, which I think there was a few funds, maybe ARK sold the bottom on that one as well. It's like you can kind of counter trade ARK, counter trade Jim Cramer, copy trade, big Nancy, and you should do all right. But it's still 80% down from listing, and there was obviously an awful lot of people who bought in on listing. A lot of hype around that. Probably marked the top from that age. That's part of the cycle, but there was also obviously November time as well, where that kind of peaked, kind of bottomed. It got listed on various exchanges. I think did Robinhood list it in the end? I don't know if they did. Probably a competitor, so they probably didn't. But yeah, it's the idea that it's spot Bitcoin as well is great. Obviously, we've got Grayscale have been. We've got Grayscale that have been pining for this spot ETF, which doesn't make any sense why it's been rejected. I'm pretty sure they're taking the SEC to court on that one, which is brave, but they could pull it off because it just makes no sense, right? It's just like they're rejecting it for the sake of rejecting it at this point. But yeah, we spoke about before, haven't we? Like the idea that Bitcoin's supposed to be this kind of has this strong kind of sense of financial freedom behind it and non-intermediaries and all that kind of stuff. But then at the same time, you've got a lot of holders that want this kind of news, which is kind of counterintuitive and goes against like the whole ethos behind it. But then I suppose you've got the maxis as well that are just like, yeah, we don't want this. So I don't know. There'll be two camps on this one, I think.
Yeah, and I kind of feel like my audio might be different because I'm in my kitchen now. But what I'm seeing with this is you've got two companies who are kind of like in the shitter who've just partnered up. So whether they go further into the shitter, I'm not sure. Because if I remember correctly, BlackRock have 10 trillion assets under management, and they were down by like what was it? They were down 1.7 trillion of investors' funds. So you've got BlackRock who's down, Coinbase is down. Combine these together, and like, what do we create? Do we create even more down, or are these guys gonna fully partner up and actually like do something positive? Because like the news as a headline looks good, but underlying down. Well, if it's like maths, down equals up, right? So I
know. Yeah, I know what you mean. The problem is when you've got 10. I wish I had this issue myself, but when you've got a 10 trillion AUM, it's really, really difficult to get those percentage gains, and it's also really difficult to kind of exit at scale as well. So it's kind of slow and steady wins the race. The larger the actual asset under management gets, because if you're the majority holder of every single position that you're in, it's extremely hard to get out of those positions. So you kind of have to have backstop of that in and of itself. But you've also kind of, in doing so, being a large holder, you're obviously more exposed to kind of volatility. So even them being down, 17%, they're not doing too bad in my opinion. But if they ever want to kind of offload, it starts to look a little bit risky, because that's when you start seeing like whale wallet tracking, and like if FTX want to sell, then they're going to cause some damage in the chart and denting in the chart. And there's probably something else we can get onto further down the line, but the idea that Maker DAO want to move away from a stablecoin, which is hilarious, and they want to kind of whack 3.8 billion into ETH, but it's kind of the same old story what we've seen with the Terra Foundation wanting to become the largest Bitcoin holder. As soon as that kind of volatility hits and everything unravels, people have to offload those large positions on the market, and it doesn't necessarily look good. So, yeah, I think net positive. What do you think? Or are you a little bit more skeptical?
Yeah, I think net positive, just purely because you accessing just from the client base that BlackRock have, and giving, essentially, why did BlackRock choose Coinbase? It's a very simple reason. It's because Coinbase does have custody. They have custody services. They focused quite strongly on that because they wanted to cater to the normies. And I think that Coinbase really does afford themselves the opportunity from that perspective and that perspective alone, because, you know, in terms of the greater crypto community, their reputation is not great, but normies don't know that. And if you can provide a service that secures those coins, you know, with BlackRock kind of putting all this, the checks and balances in place and the guarantees, this is very much a net positive from that perspective. Forget about, you know, what the crypto sentiment is around these companies. It's irrelevant, actually, because, you know, maybe it's 100,000 people, or even if it's 1 million, you're not catering. That's not catering for a sentiment that's going to extend into hundreds of millions of people that you would hopefully would like to see them. Well, you would hopefully like to see those numbers get involved in crypto. So yes, definitely a net positive. And, you know, as the reasons that I stated, this is good for crypto. It's not good for the maxis. It's not really good for, you know, kind of like this ideology that you talk about, because I don't think that ideology really has a place anymore. I think we've gone beyond that. I think there's going to be other things that will come into the crypto space that will latch onto the whole ideology of financial freedom and all that kind of stuff. And that's for another stream, as you very well know.
Okay, yeah. So that whole idea of BlackRock and large holdings just made me immediately think of this that I didn't necessarily have up on the screen, but I think it's a good conversation to have for the stream. So MakerDAO founder says it will almost inevitably DAI will abandon USD peg. So what the fuck does that mean? Because like the issue was with DAI, they were initially backed. So you deposit ETH into a contract, and then you can go and borrow like, I don't know, 70, 80% in DAI against it. So it's a collateralized debt position, ETH into the vault, DAI out, and then if anything goes wrong, volatility, and you get liquidated on that position, where the amount of ETH you've deposited, let's say you've deposited $1,000 worth of ETH and you've borrowed $700 worth of DAI against it, and then ETH drops below the amount that you've borrowed, then your ETH position will be liquidated. But those liquidators liquidators on the other end, if it's extremely volatile and they're not willing to kind of pick up the bad debt that the MakerDAO vaults have taken on by people kind of taking out too much of a high loads of value, then they have to find a place for that ETH that gets liquidated. So what they're saying here, based on recent events with the USD blacklisting, which we've talked about multiple times on the show, the idea that people are just kind of beginning to wake up that USDC and USDT is a culprit of this as well. There's like over 650 blacklisted wallets on USDT. They can freeze funds, and they will freeze funds. And the idea that we'll get into Tornado Cash in a little bit, but this is kind of the MakerDAO founders started to say now that the stablecoin could exist. It's USD peg, but eliminating all of its USDC exposure. The DAI stablecoin is currently backed by 60% USDC, according to DAI stats. Like, this was the whole Danny meme narrative, wasn't it? It was like, what's the point of having a decentralized stablecoin that's backed by USDC? It's kind of like, it's just a stupid layer on top of it. Whereas when it was completely backed by Ethereum, it might have been more volatile, but at the end of the day, you're a decentralized stablecoin wrapper on top of collateral that can be frozen and sanctioned. So it makes completely no sense. So I have no idea where they want to take this. I don't know if they want to turn it into another stablecoin that kind of mimics the value of the dollar, but not exactly. The underlying collateral isn't USDC. I don't know what they want to do, but you know, if they want to fucking market buy 3.8 billion of ETH, then we're going to end up in the Terra situation again, aren't we?
Yeah, because like, what happens if they do back it against ETH and like ETH like absolutely capitulates back down to like Goblin Town? Well, what actually happens then?
Well, so let's say there's like they buy $3.8 billion worth of ETH on the market, and that's the only thing that is then going to collateralize DAI. So there's no USDC underlying, there's no like USDT, there's nothing apart from ETH collateralizing it. So effectively they want to go and be like an extreme large holder of ETH in that sense. In doing so, then if ETH, as you say, shits the bed completely and causes the ETH that's in the vault to have to be sold because people get liquidated and then hold their DAI, then they have to find liquidators for that ETH. So because it's coming from one party, it's like they're in a little bit of a sticky situation there, because everyone else who's on the liquidation side of this kind of event just says, well, we know how much you're hurting, we know how much you need to kind of sell this collateral, so you become a forced seller. They can effectively name the price on that ETH. And that's what was happening with Terra when they started to buy a shitload of Bitcoin as their backing, as their reserves. Then when they needed to sell it, everyone else who's on the other side of that trade said, well, how much is this sale worth to you? Because it's, if you don't sell it, and if you don't sell it at this price that we're asking for, you're fucked. And there's not many people in the market that would be able to afford the liquidation and the backstop on that. That's the issue. So that's when we've seen that kind of, as you say, capitulation. So stuff like this, it doesn't really fill me with a lot of confidence, if I'm honest. Having a kind of basket of assets is a little bit better in my opinion. You've still got, like with MIM, for example, you've got a lot of LPs in there, you've got a lot of yield bearing assets in there. It's kind of a diversified basket of assets. But there is some still like 3 pool LPs in there that do consist of USDC and USDT for MIM as well. So people shouldn't really overlook that. But I don't know. It just seems a bit of a knee-jerk reaction to me.
It seems like they're taking like an unnecessary risk. And if they were to buy 3 billion or whatever, like surely they would have done it like last month when it was 1,000. They would be up like 80%.
It's not as if they didn't know that USDC could be blacklisted. Like, do you know what I mean? Like, I don't fucking know. Who knows? Right, Jerry. Any final points on that?
Grant, you know what? I'm scratching my head. I have absolutely. It really doesn't make any sense. You know, it's the first thing that I thought when I saw this was, you know, what do they stand to gain out of this whole thing? You know, because at the end of the day, a huge decision like this comes down to what are the financial benefits of it? You know, obviously, what are the risk? You know, what risk are you averting? Well, we know what that is, but what are you benefiting from MakerDAO's perspective? And I think the only way that you're really going to find the answer to that question is to maybe get them on stream and ask them. I mean, imagine the opportunity of being able to speak to those guys directly on this issue. It would be really interesting. I see you brought up what Vitalik was discussing around the makeup of Maker DAI. Is that what you're looking at the moment?
Yeah, I know he wasn't really warming to the idea, despite him being quite a proponent of DAI. I think he's quite openly spoke about RAI, and he's quite openly spoke about a few other more crypto native collateralized stablecoins. So there could be that whole narrative spun up from that. Do you know what I mean? So it's like you could be looking at charts that are still relatively bottomed out, haven't really had the ETH merge narrative built into them, and then looking at projects that have these governance tokens similar to Maker, like how Maker is to DAI, looking at your RAI, looking at your Reflexor and all that kind of jazz as well. So that could be something we could cover, but let me try and see if we can get someone from Maker on, because I think that'd be a good conversation to have, because there's a lot of questions that I'd like to ask. I'm sure there's a lot of questions that we could get from the community around it as well, because it doesn't necessarily make sense. I don't really know what they're going for, but you know, it keeps them relevant at the end of the day. We're talking about them, so
yeah. I mean, then they are big players. They've been around for a very long time. You know, they've been tried and tested. You know, they've walked the walk. So, you know, and I don't see them going anywhere either. You know, they know how to play this game.
Yeah. So in lighter news with regards to Ethereum, the merge has been scheduled. What do you think? 15th to the 16th of September, which the official merge should go live. If we can get a more accurate estimate, do you think we should live stream it?
Yeah, we could do that. I mean, it would
see
be
the absolute really chaos.
Well, I think it would be, you know, the same as watching Formula One. It's like you watch Formula One for the first 10 seconds, and you kind of secretly hope that there's, you know, a ball of fire somewhere along the line. So let's do that, you know.
Yeah, I'll get it up next week as like a, you know, you can set a premiere so people can like, and we'll get it spammed up. But yeah, I just want to see. We should have like 2 screens up. It's obviously have the countdown to the merge. Let's see go live. If there's any fucking chaos, if there's any commentary going on, we can commentate it. And then the charts are going to be nuts. That's going to be.
It's going to be interesting to see what actually happens, because like the open interest for Ethereum right now is like going through the roof. And if you look at what Glassnode was saying, and this will be in like the newsletter as well, is like they're playing like long now with like the open interest in Ethereum options, for September, but in October it just tanked. So bullish September, maybe a slightly bearish October as a load of people take profits. But I think I made a tweet yesterday as well. It's like, beers, burgers, and Binance round mine to watch the Ethereum Merge go live on 15th, maybe 16th, might even be 17th, because there's no actual confirmed date. It's all maybe.
Yep. No, it'd be fun. It'd be fun to see how ETH, the fork, obviously because the fork's going to happen. We want to see who's right. What's consensus? Are exchanges going to support the ETH proof?
No. Absolutely. No, I don't think they will. I think it's counterproductive, and it just creates a whole lot of issues that I think this market does not need at this point. That's my call. Maybe I'm being optimistic or too optimistic around it, but I just don't. What is the benefit for an exchange to support ETH proof of work? I mean, it's just a dumb idea. It's completely.
Yeah, so Polynex,
it's a complete antithesis.
His Royal Excellency, he's fully supporting it. He's even going to give some of his bag away to those that are actually using the fork. Like if you look at it, Polynex will be Polynex will be like supporting it, because that's his exchange. He's already like paired up with. It's already got like 4 different pairs. Obviously, one of the biggest one will be his like USDD.
See, I'm gonna go against what you said there, and I think they will support it and list it, because an exchange is there and they profit off volume, and even over like the space of 2 weeks, the volume that proof of work, the Ethereum proof of work will actually drive the speculation around it. Piss off, Siri. I think it's just going to be a cash cow for exchanges. There's going to be a lot of volume. There's going to be a lot of speculation. There's going to be a lot of volatility. People are going to be shilling. But I think I've heard, I can't remember who was saying it, that if you think you're going to have an edge in trading that thing, just think again, because there'll be pre-programmed bots already there to completely destroy you. They'll have the block time. They'll have absolutely everything pre-programmed in, and like retail's not going to do well with that, I don't think.
So I'm very disappointed. I'm very disappointed. Very, very disappointed to hear that you're. But you're probably right. Continue living in this ideal world where it's actually going to be. You're right, dude. It's actually going to land up being such a shit show. Like they really are. It's going to be carnage, absolute carnage. And essentially, what you're saying is that it's going to be bot versus bot. And a couple of the retail guys who get caught in the crossfire. And we definitely need to stream that then.
All right, moving swiftly on. Yep, so again, me and Dan spoke about it on Tuesday. If you didn't listen to that one, you can go back and watch it. But effectively, this shit show with Tornado Cash and USDC blacklisting, Dydx blocked and then unblocked some accounts around it. Just the actual very act of blocking them, and even though they have unblocked them, like it's for me, it's like why would you ever do that in the first place? But I suppose it comes down to, is this kind of another kick up the arse for them to get over to Cosmos? to get their own chain to be registered in a different kind of jurisdiction, so they can be completely decentralized and not have to face that kind of backlash. I don't like this. I like Dydx as a platform, but I really don't like this sneaking into other protocols outside of Tornado Cash. We did say this on Tuesday, Dan. I can't remember what we used as an example, but we just said if protocols start kind of retroactively blacklisting wallets that have interacted with Tornado Cash at the whims of kind of regulators peering down on them. What you really hope isn't going to happen is, I don't think it will, but this is like the worst case scenario, is Uniswap starts doing it because they're under regulatory scrutiny and stuff like that. I don't think that'll ever happen. But yeah, I know that's completely like never going to happen, but
it might though.
It could happen. Like it's like the possibility is there for that to happen, but you know, I just don't like this whole thing at all.
So Grant, why do you think they did that? I think that's probably the most important thing to dissect, is why did they do that, and then why did they do an about turn? That's really relevant here. Why do you think they did that?
They probably had a bit of a knee jerk and complied, and then I don't know. It's like two knee jerks in one kind of day. It doesn't really make any sense to me at all. I don't know, and I think they've obviously had to respond because there's a lot of products on the market that are willing to take their crown. Namely,
I think it's really is. I think what this opens up is the Pandora's box that is, you know, the privacy thing, the decentralization thing versus, you know, regulation coming into the mix. And the biggest question that it asks for me is, to what extent can decentralization exist in light of the fact that the only way that we get mass adoption is through regulation? I don't think the two can actually exist in the same room together. And that narrative that will play out in the coming years, months, is all played out in one day with Dydx, in my opinion. It's kind of like, we want to comply, we want to be legit, we've got an amazing business, it's sustainable, it's wow, we've actually lasted for longer than 99% of the project in the space. We can't piss off the regulators. Let's let everyone know that we're on board with doing things correctly, and we will therefore comply, as you said. The golden word, comply. And this is all around compliance. It's all around how do we remain relevant according to regulators and as being the darlings of the whole space. And I think that's what this is. And I think there's some interesting discussions and the semantics around those discussions around how do you actually navigate decentralization and regulation.
That's a good point. Yeah, it's a good point. How do you keep like privacy decentralized without being accused of continually money laundering? Because that's the whole thing about Tornado Cash. The government sees it as money laundering. So then how do you reverse that? But then if you look at a bank, or if you look at the local hairdressers down the road, they're laundering money. But because it's not on chain, can't track it.
Yeah, just ask HSBC how they do it. They're pros at it, aren't they?
100%. You know, obviously the topics that you raise are critical in this discussion. At the same time, they'll only really look to monitor and regulate blockchain because it's an open ledger system. And it's beautiful because, you know, it took the maxis all these years to convince, you know, Wall Street and everyone that this is an amazing thing. Actually, so amazing that governments have been averse to using it because then it also puts them under scrutiny. I mean, imagine being able to track what your government official is spending his money on. You know, something like that would just never go down in most countries. You know what I mean? It's just, There's no ways. I don't want you to know what I'm spending my money on. I'll tell you what you need to know, but I'm not going to tell you the truth. And the blockchain allows for that. And it's the same with paying your taxes, all of that stuff. It's accountability for everybody, not just you and I as simple citizens. It's accountability for institutions, for companies, for government organizations. It really is a double-edged sword for everybody, and it's going to change the way that we do business. It's going to change the way that accountability is brought about. So a lot of interesting discussions.
We see it on through the magnifying glass on when, I don't know, you've got kind of wallet trackers and people are picking up when certain people are buying or certain exchanges are moving funds around. So it's not too crazy to think of a world where that kind of reporting and infrastructure is completely transparent for completely different kind of transactions across the world, where I know it obviously won't relate to kind of like your DeFi projects and stuff like that, but I mean that's obviously in a perfect world that's a much fairer and easier system. But you're completely right in what you're saying. 99 times out of 100, I don't necessarily want a complete open, transparent place for people to see everything I'm doing. I don't think that's right. I don't like the idea of the banks being able to do it. I don't really like the idea of people on chain being able to do it. But I suppose if everyone has to follow the same rules, then that's fine. But you're definitely not going to get it. You're not going to get British government ever introducing anything like along those lines, because you can just completely see the fuckery that goes on behind the scenes. So they won't adopt it for that very reason.
Here's a business idea for you. It's a business idea that centers around tracking, for accounting purposes, what individuals, institutions, corporations, it doesn't matter what it is, that can basically go into the blockchain and do find and seek on different parameters and do a reporting system for whoever's requiring it to do. And I'm sure there's guys that have already done this and are tweaking it already, but that's a business idea right there. How do you improve? The same way you got wallet trackers, the same way that you've got Nansen and those guys. It's exactly what's going to happen on the accounting side of things, and accountability will take on a whole new meaning, especially when we reach that point in the future where you will be using the blockchain and you won't even know that you're using it. And that's where mass adoption occurs. That's when it has occurred, and accountability at those levels will start happening. So the DYDX, to summarize, the DYDX scenario is effectively, like you say, the double whammy knee-jerk reaction that they had is, in my opinion, look into the future of what decentralization is going to land up being, and it's all about accountability, compliance, and being in line with what regulation is. Not a great thought, but that's what I think is happening.
Yeah, it'd be good to see transactions from the Royal Mint in the UK to OnlyFans.eth and stuff like that.
I'm glad no one tracks my wallet then.
Right, moving on, because I need to go in a sec. This week we were going to jump on for kind of an emergency stream, but the Curve finance front end was compromised, and around 27.7 ETH was moved. But I think there was a little bit more than that, and I think it ended up totaling to 570k. But see, this is the issue, right?
How did CZ magically find $450,000 worth of it? That's bizarre. How did he find it? And such a round number as well. Bizarre.
Yeah, it's
It's not bizarre. It's because someone obviously I haven't read this article, so that they obviously
you had some Degen move it into finance.
Yeah. Yes, exactly. That's what happened. Didn't put it through Tornado because he was scared the IRS was going to get on his case, so he moved it to a central exchange. I'm guessing now. I haven't read the article.
I think from something I read this week, there was another kind of mixing service used, which is hilarious.
Oh wow! Yeah.
Someone pointed out that you're willing to hack the front end of Curve, but you going to comply with US regulations. So it's like, what kind of person in their right mind would do this? I don't know. But yeah, it's like CZ. Like Binance have recovered an awful lot of kind of funds that have been stolen in the past, but it's like, do we want this to happen or don't we want this to happen? I think like we can't have both sides of the same argument, can we? If we want those funds to be recovered, then there's obviously has to be kind of stopgaps in place to allow it to happen, such as blacklisting and things. So it's a complete double-edged sword and a complete shit show. And I don't want to be the person who has a complete one-sided opinion on it.
But it's funny how he stole something, then he had to do KYC to get it out. And that's when he got stuck.
Maybe it was just like
Grant.
Yeah.
You know what, Grant? This is essentially, once again, a continuation of Tornado Cash, DYDX. This is just really falling in line with what it is that we were chatting about 5 minutes ago. Is that you really do have this conundrum where we want anonymity, we want the beauty that is this whole scene. I believe that there's going to have to be a compromise, and I'm really stoked that they recovered this money. So I'm all for this kind of thing. At the same time, I'm also not for like this whole complete like expose on what you're doing and how you're doing it and all that kind of stuff. And it's, where is the middle ground on this? Do you only really pull the trigger when there is like a crime that's being committed? Then you use the tools at your disposal. Maybe that's the compromise, and those are the discussions that will follow from this.
Yeah, but then it comes down to wherever you leave kind of ambiguity. It's who determines what's a crime.
Good point. Good point.
And then how would you factor in rug pulls then? Because that's in theory theft as well.
Yeah, fuck me. I mean, if CZ wants to give me 450k that I've lost from rug pulls over the past few years, I'm more than happy for that. So yeah, we should pursue that. Fuck me. Yeah. I've lost a fortune.
You see, if the hat fits, gentlemen, if the hat fits, then best you put it on.
Exactly right. Right. Bit more optimistic news, pardon the pun, but TVL on Optimism overtook TVL on Arbitrum for the first time since 6th of August. Currently, the TVL on Optimism stands at 1.1 billion. Almost all of the increased TVL can be attributed to the launch of the OP incentives on RVV3, set to distribute 5 million OP tokens to users. Again, Dan, we touched on this on Tuesday, didn't we? I think we pulled up let me see if I can find it. The Optimism eco, we said that started to slowly look like it was kind of not fizzling out, like that's a bit of a harsh word, but it looked like it was losing a little bit of steam. And I think kind of this will probably go and completely prove me wrong overnight and like rip like 10x. But I think you've got competitor L2s like Arbitrum and Metis kind of picking up steam as well. And I think Optimism, yeah, great. But because they've got such heavy incentives on the ecosystem, what you kind of need there is demand to outweigh the outflow of emissions coming from all these protocols and incentives. And I think emissions are starting to catch up with the demand for the actual token and speculation exposure as well. What do you think?
Yeah, I agree. I mean, like, if I was getting all these like Optimism tokens for free, I would definitely look at selling them, especially when it pumps. If you look at that chart, it looks like it's about to form the right shoulder, which is probably not going to be the best thing if all these tokens are there and then it just goes down. If it just gets pumped, so maybe people might front. So they might front 1.7. And then it goes down. Yeah,
those emissions have to go somewhere, and they're quite hefty. So, they get sold into the market, relatively illiquid exchanges to sell them. So, people who are back holding eat that. So you need to be, I don't know, just play it smart. It's the same old
I think
story.
every single chart at the moment in the DeFi space is starting to look like this Optimism chart. I was just looking at the RDPX chart, same thing. They all really are starting to look like that on the 4 hour. part of the whole thing.
Have you looked into the Ethereum
at the
chart?
moment? Look, Jones, the same thing. Ethereum is it's doing its thing at the moment.
If you look at Ethereum,
yeah.
If you look at it and you really zoom in, you get the RSI. You can see there's like bearish divergence coming. So like, let's just say we go into the hourly, and then I don't know if you've got the RSI there, but you can, if you pull up the RSI indicator, you'll be able to see.
Did we try and put this on last week and it wouldn't have it?
Yeah. So if you just take one of your random averages off, there you go. Bingo. So now if you zoom into like maybe like the hourly shows it quite well. Yeah, there we go. So you can see where volume's obviously coming down. The price is still slightly going up, but then we're getting into that, starting to like see where people are selling off. I would see it coming down, starting to like fizzle down a little bit before another big catalyst happens.
I don't mind it. Like
same.
I think tailwinds are strong if we don't hear too much from I don't know. Fucking hopefully China don't go do anything stupid over in Taiwan, but good print from CPI this week as well. So I don't know. I'm slightly optimistic, but the chart doesn't exactly look. You know, you could argue it's consolidating under the 1900, but you know, as you say with the RSI, it does look to be ready to sell. But I think as soon as we finish the stream, it'll probably rip another 10%.
Bye.
Right. Yeah, shameless plugs, I think, to finish up. So we released a complete idiot-proof Degen's guide to options, perps, futures, hedging. Me and Jerry double-teamed this one. And again, it's all around trying to get everyone ready for the Hero Network going live, because all these kind of derivatives, you're going to be able to find ways to make some great yield. You're going to be able to find some ways to kind of create cool strategies. So you need to people need to really start doing the homework around it, because I think it's what I found was if you don't try shit out in this space and you don't begin to slowly pick it up, you kind of slowly get left behind. If you think back to like 3 or 4 years ago, the only thing people were doing is buying tokens on an exchange and leaving them sat there and then probably trading them a little bit on there. Then DeFi came around and people made ridiculous life-changing money. And now we're starting to see like the whole derivatives come on chain, and there will be opportunities like that. I'm not saying it's going to be as lucrative as like kind of DeFi summer and all that sort of stuff, but there will be kind of new opportunities that people need to continually upgrade their skills with and stuff like that. So that was the whole premise around that. It's around 30 pages long. It should be completely ape-proof. Anyone should be able to kind of understand it if they have a basic understanding of trading or crypto. There was a Metis thread that we released as well yesterday. It just goes into the projects that are on chain, what we kind of like. There are a few that we missed off, maybe 1 or 2 that we missed off, but you know, that was kind of our whole thesis around that ecosystem. We're going to be covering Metis a lot more in detail, but that was just kind of a kind of catch-all 12, 13 tweet thread. The most important, we saved for last. We're doing some research today in the newsletter where you need to, if anyone's noticed, there's only 4 shapes in McDonald's chicken nuggets. That is the ball, the bell, the bone, and the boot. So you can go and vote in the newsletter, which is in the description. I've got my opinions, but I'm not going to put it out there just yet. But
and
I'll make
I try to like bring up the importance of this. Like, this is actual data that we may or may not be presenting to Mr. McDonald himself, because we are looking at maybe not getting Mr. McDonald into the Metis ecosystem for some fundamental research on decentralized restaurants and NFTs in the shape of something.
Yeah, I can smell some bullshit there, but you know.
Well, it smells like a McNugget.
Okay, we've got a minute left. So whilst these two actually play games, I'm going to comment on the 2 threads that you put out there. Well done, sir. Those 2 threads. The hero one was obviously really necessary, and in my opinion, the alpha for this, besides the chicken nuggets one, the alpha here is that the space is changing right now, and we've been calling it for a while. soon all these other so-called influencers and labs will be talking about real yield. A couple of them have mentioned it, but they don't really know what it means. We do. We have reported on it, and we will continue to do so. And I think real yield is exactly what the Hero Network guys are doing and what they're building, and they will be launching quite soon. And Grant was very, very correct in saying that you've got to find an edge all the time, and this is one of those edges. Options are a huge thing. You know, there's money to be made here. And if you are serious about, you know, being a diligent trader and someone who wants to be ahead of the curve, this is alpha for you guys. Go and read this thread. There's some really important stuff around how the mechanisms of this market work. And, you know, the Hero Network guys are essentially bringing the ability for you to trade these different strategies on a silver platter. It's just whether you guys are willing to put the work in and find out how to do it, like anything else. And I think the guys who work harder in the next 3 months around this are going to make some serious money, you know, in the months and even the years to come. In terms of the Metis thread, also another really cool thread, and maybe even a little bit of a change in strategy in the way that we're approaching things. So from our side, we're not only writing articles, we're also, you know, breaking it down into a proof and, you know, just making it really obvious for guys to be able to read and digest this information. This is a great summary on what's going on out there. And I think we'll be doing it for other ecos as well in the future. And, you know, obviously we're also going to be doing streams around the articles that we're writing. You know, we're going to break it down once again in ape speak so that everyone can understand. And also for you guys to go out there and play the game and hopefully get some wins under your belt. And that's it from me. Don't forget to subscribe and like. Appreciate it. We obviously trying to make a living out of this, and you know, you guys can help us do that by giving us your thumbs up and by subscribing.
We need 27 to hit the nice shiny 1,000 number. So that if we can get that over the weekend, I'd be overjoyed.
Dan,
all right.
Anything from you?
When's the newsletter out?
I think I said more enough, but the newsletter, the Friday newsletter with the important research from the block is out a little bit later this morning. If you're in England, if you're in Asia, it's out tonight. If you're in America, you wake up to it in the morning. But there will be a lot of alpha drops in there. The news has been pretty hot this week, so there's a lot of like cool, interesting topics in there. And then the stuff that I put in from the rest of the internet is always quite amusing. It's a mixture of what's in the markets. And I even added a little bit in there for you sports fans as well from that old Serena Williams, but I won't spoil the surprise.
Perfect. Right, that's great. Please do the like and subscribe and all that YouTubey stuff that we don't know what we're talking about. And we'll be back Tuesday. We've got a few interviews as well next week. So, yeah, but for kind of a market roundup, go through some charts on Tuesday. So, yeah, we'll see you then. Thanks again.
Cheers, lads. Take it easy, everyone.